Where to buy in July 2023? Okay, so there's a lot of questions being asked at the moment with interest rates finally paused for a month as of yesterday. Where to buy? Should we continue to look into WA, into Perth, as a large capital city that's only growing larger very quickly, or should we broaden our horizons, potentially looking back into Queensland en masse? So just so you know, I am going to be referring to the Ripehouse R score, the capital growth score that we have here at Ripehouse Advisory. This really does lead us towards suburbs using a data-driven approach. We have AI plugged into this, and we were pioneers into this space now around 10 years ago. I have a data science and a technology background. Been a software engineer professionally around 20 years ago, was what I used to do when I was still working. Now, this is the results from the algorithm. Since 2015, it has 4.5 times the capital growth of the broader market. And you can see here, whilst the market has corrections, this just continues to plod along, tick, 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 because it is removed from very strong risk-adjusted returns in residential property investment over this period. And this continues on. As you'll see in a moment, these types of growth results occur month in and month out. Go back in our YouTube channel, check out last month. Last month we achieved 4.2% capital growth for the month. This month we achieved 3.8%. So if you purchase a property using these suburbs, and I'm going to talk you through them here in a moment, you can see them here already. This is the whole point of the video, is to talk about these emergent areas for July 2023. But if you bought a property in our target locations last month, 30 days ago, you would have generated 3.8% capital growth in that time. This is updated automatically. This snapshot was generated from these suburbs, calculating the median prices from every property sale in those suburbs for the last 30 days. We have all of that data built into this page, and you can see here, go back into the previous video, this snapshot is from the 30th of the 6th, compared to the end of May, the beginning of June. The last quarter rolling, so this is now Q4 2023 financial year, completed 8.1% capital growth in the last 3 months alone, and 16.2% capital growth across 2022. That's when the market went backwards. Now, this is not a fluke. Over the last 5 years, 2018 through to 2022, and there's a point to that as well, guys. It's 5 years worth of results that is rolling. We've got results that go back prior to that. It is 5 years results because we've been operating for longer than that period of time, multiple market cycles. I myself purchased my first investment property over 20 years ago, and I've made a lot of mistakes that we don't need to make again, okay? At the same time, 2020, Townsville, Toowoomba, the data was showing signs for our Ripehouse R score. We didn't buy in Townsville because of my experience. I just knew the same factors were at play in this market outside of the data that I had been burnt with personally by buying up half a street in Dubbo 15 years before. Okay, I saw similarities based on the on-market dynamic and my understanding of the locals and what was going on there to my investments in Dubbo that I got personally burnt on. You know, I had boarded up houses next door. I had lackluster capital growth for multiple years. I had great yields. I had really high water costs, really high holding costs. And so my yield on paper looked great, but my actual in-the-pocket returns was very low. And I saw strong similarities with Townsville. I didn't buy in Townsville. We bought 120 properties really quickly in Toowoomba, have had them almost double in value over the last 3 years, and the data was very similar for both locations. So we have to dig deeper than the data, as you'll see in a moment, but this is a great place to start. So to answer the question, where to buy now for July 2023, Sunshine Coast is really emerging very strongly. Bendigo, Geraldton, Port Adelaide, Enfield, Launceston, Gold Coast, Lockyer Valley, Swan in WA, Townsville, Mackay. That's from a pure data perspective. As I just said, we are ruling Townsville out because of insurance premiums, socio-economic issues in the key sweet spot areas, lack somewhat of diversity of employment. That's arguable, but we've definitely ruled that out with the big red cross in private advisory. We haven't allocated any client, high net worth, sophisticated investor capital to those markets in the last 3 years. Now let's have a state-by-state summary. Actually, I might go to this view for this one. Snapshot was generated today, the 5th of the 7th. This gives you a breakdown of the states. Okay, so Queensland has the majority of our approved locations right now. South Australia, WA, and re-emerging quite quickly New South Wales and Victoria. Now, from last month, we have seen the median sales price increase from $495,000 up to $510,000. The average gross yield on entry is 5.1. Now, remember, we see investors being obsessed by cash flow. There's an obsession about cash flow. Cash flow positive. I used to have a rule when I was buying my investments, almost 20 years ago, that I wouldn't be interested unless it had a 10% yield. You have to remember that was a very different environment, right? There weren't many property investors at that point, really, and there were a very small number of investment properties. Very different environment now. This is capital growth. I'll ask you, are you earning an income? Well, do you necessarily need more? What you need to be able to do is push your income and build an asset base as effectively as possible and get that asset base generating you equity whilst you sleep. That is the first priority. So whilst we want to have a strong yield and a growing yield and an increasing yield, we want absolutely drop-dead amazing capital growth. So of these Ripehouse Advisory approved locations from a data perspective, we've plugged them through here. Of all the suburbs in the country, only 10% of them qualify from a data perspective. The R score needs to be in the top 10 percentile. From there, I personally am passing my own sniff test. 20 years plus of property investment experience. I haven't just dropped in on the last buyer's agent course. Okay, I haven't been operating my business for a couple of years and, been testing out my theories on clients over the last couple of years. I haven't been referring to figures and facts and figures that really haven't been through a proper property cycle. When I approve a location, it is backed from my experience, my mistakes. My wife getting phone calls on a Sunday afternoon saying the house next door in Dubbo has been burnt down. We're going to have to board your windows up. How does that make you feel? Because I have then seen those same similarities with the other markets that I've rejected. Now, I wrote it down. Last month, we had almost 300 suburbs turnover. So of the 1,500 suburbs that are in the top 10 percentile, right, there were 300 new entrants, just under 300 new entrants coming into July. I went through all of those manually on the weekends. Okay, my wife wasn't too happy with it, me doing that, but I did. I rejected 250 of them. 42 suburbs I approved. And that was me going through what I know about those locations manually, one at a time, and approving them. And I don't delegate that task. It is extremely important. My reputation, brand, Ripehouse Advisory, the buck stops with me there. Right, there are a few where I needed to jump on a plane, I need to go back on the ground. We don't ever approve a location without me being on that location on the ground within the last few years. And then I would then feed that back into locations, with my understanding, with my locals on the ground to get the yay or nays if I've got any questions. Where I don't have any questions, where I've been on a plane and I've seen those locations recently, I can approve them knowing that I've just approved the suburb next door, etc. Of those locations, going back here, so think of it this way, these are all from a data perspective. I know all these locations, right? Probably with an exception of the Lockyer Valley. Some of the areas through there I haven't been personally in the last 5 years, and Geraldton. I haven't been to Geraldton, and I'll talk about that in a moment. We are not buying in Geraldton, and we won't buy in Geraldton because it lacks employment diversity and doesn't have the population to sustain a reliable sample size from our perspective. So I didn't need to jump on a plane to Geraldton. I ruled it out prior. Yields are great, capital growth might do well, but I've ruled it out because I prefer to operate in a higher risk-adjusted location. All right, so 255 suburbs, 42 added in the last month, And I think this was just under 240. I think it was 239 approved locations last month. Check that in our videos if you like. So with the add and remove, we've got slightly more approved locations as of today. As I did mention, the median sale price has shifted up 15 grand, and our capital growth performance last month was 4.1%, this month 3.8% in 1 month. And really good news, overall, all suburbs across the country went up 0.6%. So we generated an investment alpha for our investments of 3.2% in the June month. 7.3% alpha in the Q4 of 2023 financial year, and a 21.3% investment alpha in the full calendar year of 2022. Going through, this is in the last week, by the way, so this is a 7-day weekly snapshot ending as today. Just to give you an idea, nice, cool number here, 5556 was the number of on and off market properties that we did analyse at a high level. 1,125 passed our first layer of due diligence. We rejected lots of them for high supply, new construction, low demand property type, incorrect bedroom, floor plan, land size for area, price outside core demand, high public housing and street. So of those 1,125, we got down to 381 when we did our street level analysis. It's our unique internalised sweet spot analysis. Low public housing, higher than average rents, higher than average yields, good, strong owner-occupier levels, lots of the in-demand property type. And then after our final really strong manual due diligence, we went from 381 properties down to 117 that were actually finally shortlisted. So there is a multiple stage due diligence process. We've got down to, what's that, 2% of dwellings made it this far. Is that maths correct? Yeah, I think it is. 2%. So 1 in 50 made it through this process. From 381, we got down to 117 because of these reasons. So a lot more reasons here. You know, we've got mining overlays, close to areas of concern. It might be a bikie hangout, we don't know. Subdivisions nearby, flood overlays, fire overlays. Lots of fire overlays here. We ruled out 22 because of pool maintenance costs, 2 to 3 grand a year on that. Good luck getting your tenant to maintain that pool. Final approval, 117. We did formal appraisals on those properties and then final due diligence, and once again a third layer of due diligence to get it down to 78 properties. And then from there only 58 were assigned to clients because it met a overall acceptable brief and requirement and passed our personal test. We would never show a property to a client if it didn't have a projected 65% ROI or cash on cash return in the first year. And then there were 13 offers made in that week period. So that gives you a little idea. Look, just ruling out, I am ruling out a couple of these at a high level. Townsville, Geraldton. Some of these areas have, too fewer houses to have a reliable sample size. I've got my internalised issues with them. They might be too heated. I like to buy into these areas as they're in the upswing, if preferable. That's where we're buying. And that's where we're operating in July. This information I've covered here in this video is very general in nature. If you would like us to apply it to your unique circumstances, then I have set up my team to be able to have a 15-minute discovery call with you. No cost, no obligation, no selling. It's just to have a chat about this research and is it relevant to you, and generally applying it to your goals, what you're trying to achieve. If that's something that would be useful to yourself, please book in via the link in the comments below. If you like this channel, if you'd like to be the first to receive any of these new regular updates, private research, area observations, hit the like, subscribe and bell icon below to be the first to be informed. Thank you.